What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be taking a look at Talen Energy stock. And as you're going to see it here, the metrics are all over the place for this company. So it is a very hard stock to value, but we're going to do our best. So right now, the big news is that pretty much Talen Energy had a deal with Amazon to sell them some of their reactors, right? And what is happening is the regulatory agency pretty much is trying to stop it because it looks like the utility companies in that area, which are trying to fight that. So, but the good news is that Talon Energy came back and they're trying to reject this now. They're trying to get the deal with Amazon to go through. This article is about what, a week or two, no, 9 days ago. So this is a little over a week old, but we will see what happens with that. As for the stock has only been out since July of last year, so it's only been what, 6 or 7 months now. And so the market cap on this company is $10 billion. And look at their revenue. So the crazy thing here is that I don't know if I've ever seen a stock have this before. You don't ever see this. But, oh, well, I guess, okay, here's the weird thing. Their revenue skips from 2015 all the way to 2022. But when you look at the numbers, it's like, why was revenue going down and net income? Like, look at the trailing 12 months here. So here, yeah, so here's the last 2 years, 2.5 years. As you can see, they were losing money in 2022, but the revenue was at its peak, right? And since then, revenue keeps going down every quarter, but the net income keeps going up, which doesn't make any sense. I don't know if I've ever seen that before. So trailing 12 months revenue is $1.7 billion and net income is 1.1 billion. That's an insane profit margin. If we go to margins here, we can see that. I mean, it's saying it was 30% there, but look at this one, 116%. So the margin there was insane. And I don't know if I've ever seen a stock have that before. Cash to debt ratio is not good. We're looking at twice as much debt as we have cash. Shares outstanding is just kind of not doing much, so not much to worry about there. But this is just a very hard stock to value because you don't know, it's all over the place and the revenue net income are going in opposite directions. The EPS last year was $3. This year it's expected to be 13, and the next year it's expected to go down to 7. So it's just kind of crazy. It's a very hard company to value. And so, I mean, I don't know. I would put a that's why it trades at a low PE ratio because it's only trading at, 9 to 15 times earnings because the earnings might drop by 80%, or who knows, it could even go negative. And I mean, I'm sure the deal with Amazon would be a huge catalyst for the stock and it probably helped them get more deals and all that stuff. But really, as far as valuation goes and interest in buying the stock, I have no interest in buying it because I like to see consistency in companies. This one does not have that, and there are a lot of companies doing what they are doing, working in this industry. So I'd be scared to just pick this one randomly, even though they are, probably going to work with Amazon still. I still would not want to just pick this one out. So that is my analysis for the stock. I would say this is a risky one. I mean, it's had the last 6 months, it's had a nice run here, but I don't know. I mean, if their income or their EPS is dropping, 40% now, who knows? I mean, I don't see the stock continuing to run. So that is my analysis for this stock. Let me know what you guys think down below, and I will see you in the next video.